Gentlemen, hold that thought. We'll head into a break. We'll get a quick closing comment from Atul when we come back. But as we head into the break...
In terms of valuation, telecom also seems to be seeing a lot of action. In fact, Idea was one of the big movers yesterday. What's happening out there? Is there a domestic story and is there a value, embedded value out there?
I think it's purely a domestic story. I think embedded value is again depends on what you look at growth numbers going forward. I think telecom will continue to be a good story. I think momentum will come in once foreign money comes into that. I think domestically people don't understand telecom. It's a big mystery to a lot of analysts also.
How do you play the power space now, Bala? Because there's a lot of action in the futures and options activity on stocks like GVK Power, Reliance Infra, GMR that has a power division, NTPC, Power Grid. Are people starting to build into something as we wind down this year and get into the next?
I think at the investor level there is not too much of interest in the power sector. Though I think the real issue is, I think, the ability to complete projects and start delivering power, because we had so many projects starting, but how many power plants have we really seen? I think each state has a power shortage. So I am not a very keen follower or a believer in the power story yet.
New cross-margining norm, what's your own take on it?
Well, I think I have very strong personal views. I would rather not say them out. I think you are actually, instead of making the broking industry stronger, you have worsened the risk for the market. I think the real issue is one of capital adequacy with the brokers and where the capital is deployed. I think that is not still being addressed by the regulator. You are just encouraging drunken driving as far as I am concerned.
What about banks, since you mentioned capital adequacy, private sector banks specifically, what's your own take? Because a lot of them are trying to move to 12% and higher on capital adequacy ratio. You read an article about the World Bank in the papers today as well, and the support that is probably going to be provided. But your private banking sector here?
I am positive on the private banking sector. I think there are some very well-managed banks. I think, yes, they will have some pain on the personal loan portfolio going forward. But I think apart from that, I think I would, if I have to put money in banking, I would put it in private sector rather than the government-owned banks.
You missed the downgrade from Merrill, I think it was, on DLF and Unitech, if I can just dig out that paper. Yep, DLF and Unitech. DLF lower to neutral from buy, and Unitech to underperform from neutral, and Indiabulls real estate cut to neutral from buy.
When you say downgrade, are you implying they were positive on it in the first place?
At 1,000 it was a buy, at 50 it's a sell. So
just giving you the original rating, neutral to buy.
I'm not going to touch that. Bala has put it much better. I'm not even going to say
how much more lower.
I would love to see the price targets if they put out, if any.
I'm sure they would have.
See,
try and get them
I don't track the stock, but I was just looking at the price. Everybody said when Unitech crashed first time it was 31. They said at 31 you can't go wrong. So if you bought at 31, immediately it rallied to 48 and people said, see, look, we told you so. After that, nobody made a noise when it went to 22. So it's a very tough call to take. I think there is value in them, but when it will get unlocked, there is lack of belief in them.
You know, Rahul asked you about banks. Let me ask you a question. You know, in a situation like this, when liquidity is scarce, one would think that banks are the best bets because they will be the most in demand. But there's this huge Damocles sword on them, that is essentially the NPA levels. If you were to look back in 93, not 93 actually, early 2000, when we had the legacy of bad NPLs on the book at about 10 to 13%, comparing that period and now, how is it looking? How bad is it looking? Because
much better today.
Better or worse? Because the exposure to the retail side, etc., have ballooned.
No, but today they are quick to recognize the faults. I think the accounting standards are much better. So I hope the RBI doesn't dilute the standards, because you can't change the name, the disease, by calling it a different name. I think so long as these accounting standards are maintained and we comply with them, I think banks are safe today. I think if you're going to recognize a problem quickly, I think you saw the result of City Financial and NBFC. I think they showed a huge loss. The capital adequacy has gone down. They'll probably have to put in more capital. So I think the pain is definitely there, but it is not that there are so many things hiding under these cupboards. In the old days, that was the problem.
Tell us, if you were to look at 1 year horizon, which is not bad really, because you could possibly see a recovery. That's what most experts are saying. What would you look at buying at these levels, or would you wait for it to fall sharply down?
No, I wouldn't do that. I would start buying. I think my biggest bet would be to buy the index. I've been saying that repeatedly, because sectoral calls are getting more and more difficult. And in terms of valuations, I think the metal sector space is something which I would like, because if the world were to recover, hopefully, when the world were to recover, I think metals are going to be back in fashion. So,
even though they might be seeing the other side of the commodity boom, because if the commodity cycle takes a far longer time.
Mean that the commodity prices also have to keep going up. And steel prices have fallen 40%, input prices have fallen 50%. The only thing which may not fall as dramatically is the wages and the power cost.
True.
So you look at it that way, I think at this kind of valuations, you're getting stocks at 1 and 2 multiples. Maybe even if the earnings halve or go to 1/3, you're still buying it at 5, 6, 7, 8 multiples, which I'm happy to do.